So we've got roving mics, so if you've got a question, just stick your hand up and wait for one of the mics to get to you. Do we need to repeat the questions for those who are online? Yep, we do, great.
Hi. On the fossil fuel-free companies, I gather from what you said, you don't actually have them listed?
Yeah, correct.
Why not?
Largely because of the work that would be involved. So we've probably looked at a few thousand different companies and have profiled a few thousand different companies over the course of this work. I mean, we've put on the site every company that we know is classified by that tier 1, 2 or 3. Essentially what we want to do in this instance is just publish what we know about the fossil fuel exposure. So those other companies we haven't put in there, but again, you know, this is a matter of the amount that we can actually handle, the amount of volume of data that we've been able to handle. I mean, luckily, as I say, we get this information straight from the website. So if this piques your interest about any other particular issues, I'm assuming that's part of your question. I hope it is, because obviously there's a lot of other important issues. So you can either follow that up through the fund's site, or you can contact the fund and actually ask them yourself about those other issues.
I was particularly thinking, you mentioned, you know, if a company changes its habits, they'll drop off the list, and I thought, well, why not just put them on the list of the good companies then? But
yeah, it's a question of whether or not they become a good company as opposed to a non-fossil fuel company.
Just to get to some perspective, how much money do Australians have invested in super? And I realise you probably don't have an exact figure, but can you estimate how much of that super money is invested in the fossil fuel industry?
Great question. I mean, Charlie might have a better figure than me actually, and she's got the mic in her hand, but I mean, the super sector is, I think it's about $1.8 trillion, and 2/3 of that will be managed funds, so we're probably looking at about 1.1 or more into managed funds. I mean, you can probably make some deductions from the sorts of things you'll find in the company profiles here about how much is known fossil fuel exposed. I mean, even if we're only talking a few percent, we're still talking hundreds of billions of dollars. Hundreds of millions of dollars just with a few percent. But we'll certainly there'll be billions of dollars invested in the fossil fuel sector as it stands.
Hi, my name's Robert. I'm from the University of Technology, Sydney, and am the media relations manager there. I do a lot of promotions with the Institute for Sustainable Futures, and I'm just wondering what sort of media promotions you've done for this product, because if this is the first of its kind, I think it would be really great to get the message out to a much bigger audience, and obviously provide avenues for people to start to provide the kinds of ideas to grow this product that they're interested in. I'm just wondering, have you got any kind of media and PR campaign around it?
So for those online, the question was about what sort of plan do we have for media, PR, promotion. I mean, there's been some coverage of this project in the Fin Review just this morning, so before we came out. I mean, it's a lot easier to promote a product now that it's out. Look, this is something that we've put an enormous amount of work into, and it's not something that we're just planning to sort of launch and have sit there. It's going to really underpin a lot of the work that we do over the next, coming years, really. So, in terms of how to promote it, I'm actually thinking not just the next few weeks, but this is years ahead. This will be the backdrop to a lot of the campaign work that we do, that 350 does, just because we're trying to shift massive amounts of finance. So obviously we'll try and make sure that this is seen and covered and reaches the wide audience as possible. But it's got a lot more to do with the next 24 months than the next 24 hours.
I'd just like to applaud you on setting up the SuperSwitch site. I'd just like to say, wouldn't it be great if all the super companies had divested themselves of investments in fossil fuel industry, and the Abbott government did something like buy one of the car industries and buy all the infrastructure, turn it into making electric cars, float it on the market, and let us invest in it. Just a comment.
Thank you so much.
Hi, I'm interested to know what we should consider when we see the companies who haven't responded, haven't given you the information that you've asked for. I'm not sure how long they've had to respond, But what should we draw from that? Should we draw the fact that they're not where we don't want to be sticking our super with them? We should be moving elsewhere because presumably you've given them sufficient time to come up with the information we're after.
Yeah, no, it's a great question because, I mean, and for those watching online, the question's about sort of how much time should we give funds to disclose, or what should we know about the sort of engagement with funds and the pressure that's been put on them to disclose when we actually engage with them, obviously because there's a lot of, there are a lot of grey areas literally on the site. This isn't the first project that's tackled climate or fossil fuels in relation to superannuation. There are things like the Asset Owners Disclosure Project, even smaller initiatives such as we at Market Forces, we sent a survey early last year, probably about 18 months ago now, to every super fund in the country asking about the disclosure, their exposure to the fossil fuel sector. We didn't get much of a response from that, and so we thought, well, let's go and find out ourselves and publish what we know through this project. I mean, it's hard to say because you see that the lack of disclosure is systemic, and there's a lot of protection going on over where funds actually hold their equities, hold their shares. But at the same time, you've got a right to know. You've got a right to know where your retirement savings are. Regardless if you care about the issue of fossil fuels, deforestation, animal rights, human rights, whatever it might be, you've still got a right to know, I've got my retirement nest egg with you folks. What are you doing with it? So you've got every right to, and I think that we probably will see a lot more in the area of disclosure in the early stages. I mean, every fund that we've profiled here has been notified as of last week that the super switch is coming. We've seen more data come to us on some of the funds and where they're exposed, so that's a great step. And the more we know, the easier it is for people to actually make clear decisions like yourself about how do you engage with your fund, what are your next steps. Yeah.
Sure. So, I think it's important to note that in financial services, the ability for an organization to really grow and compete depends really on their intellectual property, which ranges right from the investment team that makes these careful selection with really good and hard research. And there's this narrative in superannuation, which is out there now, which is all about low fees, right? And so the easiest way to have low fees is to basically have no active investment. And you just follow the market. And that means if the market is 25% fossil fuel, you just keep investing. It's not that big, but something significant, right? So that investment for many people is a huge part of what they're trying to protect. And it doesn't surprise me that a lot of companies are very nervous about revealing their stocks. And I know as a director of Australian Ethical, we for decades have revealed every stock that we invest in. You can go to our website and find the entire list. And what is the risk? All kinds of financial advisors, other funds can literally say, oh, this is really good. Let's just copy all that great work that these wonderful people have been doing with all this investment of other super funds. So this is not a simple thing, right? And yet, I think as a society, we need to begin to have the sense of comfort that we just need transparency. It's that urgent. Even if the cost is, people will have some discomfort about that.
I'll just make one other quick remark, thank you. Just on that is, we'd hoped to have this project out quite a bit sooner this year. One of the reasons for the delay was that we had expected that laws would come into effect that actually enforced disclosure across the superannuation sector. Now those laws have been kicked back and back and further, and they're now into next year. And so we thought we'd get a bit impatient and see what we could do in the meantime. But there is an increasing trend towards disclosure, and hopefully sooner rather than later it will be just a standard matter of practice.
Hi. Well done on the work you've done so far on the site, and it's heading in the right direction. Just a couple of questions. Firstly, for those who have self-managed super funds, they're going to be interested in understanding the same information for individual managed funds as opposed to overall superannuation funds. So interested what your intentions are in providing information on individual managed funds. And secondly, in making choices about your funds, and if you're going to change the mix of from balance to growth or whatever, or even switching into an entirely different fund, part of that decision obviously involves understanding the performance of those funds. So are you intending to present information that would then say, well, if I move into something that's more sustainable, what's that cost going to be to me based on obviously past performance, to assist in that decision-making process?
Sure. I'm rubbish with two-parted questions, so I'll take the second part of that first and try and remember the first bit. The second part was about financial performance and incorporation of those other aspects. So, I mean, that's obviously something that is for advocacy groups like 350, Market Forces, Friends of the Earth. That's something that we're not equipped and we're not allowed to go into ourselves, and we don't even try and venture there. We help people make decisions on environmental grounds, acknowledging that the financial aspects are obviously quite critical, and when someone goes and approaches a prospective new fund, that email gets sent ensures that the individual will ask for everything that's financially related, any other aspect, the product disclosure statements, the fees, charges, any other particular aspects. But to go to your point about relative performance, I mean, this is actually something that's covered in the report that we've got up ahead as well, at the front of the room here, or the back, depending on where you're standing. But this actually ran a test case on a fund that took the ASX 200, stripped out those sort of tier one companies, like those heavy fossil fuel companies, and found that there was a negligible difference. I think half the time it performed better, half the time it performed slightly under. And I mean, I don't know if you can see it from the front, but there are two lines on a graph that essentially mirror each other, and that's a great indication. And I can only go on some of the experience. I don't know if Mara's got any sort of, or Bob, any sort of perspectives on the relative performance of more active management in terms of sustainable funds.
Yeah. By all means, investigate the sector and look at the relative performance. I think our balance fund in its first incarnation came out in 1990, so there is quite a large track record. And depending on the number of years that you evaluate for particular funds that Australian Ethical, just as one example of many, there are lots of outperform examples. And there isn't a track record of significant differences between the two. And so I think the argument for active investment delivering positive results that also are ethical is there. But, investor beware. As you say, it's a really important part of the criteria. And part of the challenge is when you leave some of the sectors that, we're being invited to leave, you are leaving things that have, infrastructure yields that are reliable and a really important part of a balanced portfolio, and how you replicate that in different ways is a real art. So you're quite right. I think over time, those comparisons will come into the mix where you can start looking at the relative performance as well.
And can I maybe throw to Bob for the second part of that question, because obviously we're covering managed funds here, and that's probably going to be as far as we can go within the scope of this project. But self-managed super is it's still a huge part of this of the breadth of superannuation out there. And I mean, the first thing that leaped to my mind when the gentleman asked that question was advisors. What do you have any advice for how we might tackle areas that aren't in the managed fund areas where you do have self-managed super?
Yeah, there is a challenge with self-managed, as you know, because I think there's something like 1/3 of the total assets in super is managed by self-managed funds, and they're usually invested in direct property, cash, or in managed funds themselves. So I think the fact that this site is the start of, I hope, a movement into transparency. So the more transparent we can get in terms of the investment markets, the better it's going to be for people making decisions. So I think it will take some time.
Question to Mara and Bob. I'm just wondering, what mechanism do you see that would generate or create a huge amount of investment into renewable energy, given the seriousness of what we're seeking to address here?
Perhaps I might start. You'd be aware that the government's introduced a a new super product, which is My Super, where people who are not making choices when they join a super fund, their money must go into a My Super product. The trouble with My Super is that it's a competitive marketplace, and fees seem to be the major criteria on which people are making decisions. The trouble with that is that when you invest in renewables, often they're in the unlisted space, meaning that they're not listed on the stock market, and the managers that manage those investments will be charging more than a manager who is managing stocks in a listed market. So the cost of management, the MER, the management expense ratio, is going to be higher. So one of the things that I'm concerned about is that the unintended consequence of My Super is that there is now a disincentive for super funds to invest in renewables. I think the only way that we can get the funds to do it is really getting the funds to understand the crisis we have. I mean, the funds can do it. I recall in my day in super trying to really encourage other funds to invest in clean tech. We finished up investing in a fund of about $30 to $40 million, I think. Went round the marketplace for 2 years trying to get other super funds to do it, but they wouldn't. And there's just no reason why that should be the case, other than people's lack of understanding of that particular investment space, the fact that it's never going to be more than about 2 to 3% of a total portfolio. But imagine if all super funds really got together and did this. We would then have sort of a scale, would be able to make a difference. So what I think has to happen is that we just need to get the whole sector to understand that, as Mara said before, we're heading towards 6 degrees, which is unlivable. 2 degrees is unsafe. We need to have radical change. Radical change.
It's kind of the answer, isn't it? And I think we need to think about capital in all of its forms, and we have to really discern now. And it really is a personal. That's why I put up that question: what is your personal kind of, risk threshold? How do you personally view these issues? So, it is not an easy sector. I spent time with an investment bank called Morgan Stanley in their San Francisco office doing technology banking. And so I'm aware of the huge amount of venture capital in clean technology that went in over the last kind of 5 to 10 years. Some of the big solar companies have had massive devaluations, like billions of dollars. It was almost a dot-com type inflation and deflation. So there's been a lot of value that's been wiped out in early stage clean technology, but there also is some unbelievably powerful IP that's coming out now and some really good at-scale platforms that are coming out. It's going to happen through, many people don't realize, the ICT sector is now really pushing up on the resource sector in terms of capitalized value when you throw in the Apples and the Googles. Apple has the largest independent off-grid solar thermal farm in America. It's massive, and that's where their cloud, all their hosting is off renewable energy. That investment is very important. I think it's really important for banks, and I know I'll get in trouble here for saying this, but I'll go ahead and say it. There are lots of dollars invested within our banking system, and yes, they can do very risky things, and I appreciate that the nonprofits, for very, very good reasons, are lobbying against that. But I was very excited when Westpac said they would make a commitment to $6 billion of clean tech investment. And I think those kinds of commitments are really, really important. And I'll even take the argument, get in more trouble, take the argument to a different degree, right? So this is a case study that I just like to think about, Glencore. Glencore was the world's largest minerals trading company, okay? And then a couple of years ago, they bought Xstrata's coal assets. Deep discount, the CEO likes to buy stressed assets and turn them around, so they became a large coal company. Now, a lot of people were just appalled and thought, oh gosh, the risk on the stock, and yes, it is a very big exposure. I saw a couple of weeks ago that they have put a bid on the world's largest graphite mine. Now, graphite is what will solve car battery storage and household solar battery storage. Like at what point, right, do you want that capital investment to move into a different direction? And how do you as an investor encourage that? So those are the tough, discerning judgments that everybody has to now engage with at a very, very micro level.
I can reassure you, Murray, you're in no trouble at all. And the only point I was going to make on the tail end of that discussion was that we make a similar point with the banks. With Westpac, you gave the example, they've got a $6 billion fund they want to mobilise for renewables. We would say the same to super funds as we would for renewable energy, for banks, is that they really need to make sure that they're in a position to utilise those funds, and they'd be going into bat for things like the renewable energy target, for greater policy initiatives, for greater opportunities to be created to generate the projects that they can put that money into. We talk about super growing to the point where there's just going to be this vast quantum of funds looking for somewhere to go. Well, we know the sort of scale of investment that's required to actually get the energy revolution we need. Let's see the holders of the funds actually go in and create the opportunities for them to deploy that money positively.
Hi, you've kind of answered my question in a way. I was going to ask about promotion to financial planners and investment advisors, and I got the impression that you haven't quite got to working out a strategy there. But it does seem to be an important thing, even though they're generally fairly conservative, from my experience. They don't know what you mean when you ask about sustainable funds, a lot of them. But it seems to me that something should be possible there. But linked to that, to what degree are you working with the Asset Owners Disclosure Project? Because presumably through their work, some investment advisors are becoming aware of, that there's a bit of a groundswell in this direction against fossil fuels or carbon investments.
I think you're absolutely spot on, and I mean the question again is it's about that sort of role in the fabric of the advisors who so often are the go-to. They're a sort of a hidden part of the puzzle where, as individuals engaging with our funds, and obviously there's a separate conversation going on with the advisors who really need to be educated as well. I know there's some comments already been made, but if either of the speakers want to elaborate about sort of the ways into that conversation, with the advisors who, super funds will be employing at large and taking direction from. And I know that I've had limited experience in this last year with an instance when a climate activist, Ian Dunlop, ran from the board of BHP. He's an ex-company director of a fossil fuel company, so he's a great candidate. But he ran, and super funds were under pressure and would go to their advisors to take direction, not just on how they handle the company, but also how they exercise their voting rights. So. Bob, as an advisor?
Yeah, I really don't have a comment on that.
It is challenging, I think, because financial advisors kind of should do what their clients ask them to do, shouldn't they? And yet the entire training really is about maximizing returns and making sure that the risk balance is suitable for your age and what your retirement needs are and so forth. So it feels almost like, oh gosh, another complication, do I really need to go there? So for me, it's very exciting that there's this growing network of financial advisors that are ethical, green, sustainable. They have sometimes networks, sometimes individuals. And I think it'd be terrific if this website began to point to that community. And also, I think within the funds, often there are advisors that are within the funds. And so, there to have a little bit more visibility around these issues would be very, very important. And then I guess I'm really mindful, we've just been through this huge thing with Commonwealth Bank and Macquarie Bank on advice and, crappy incentives and are people mis-selling and the whole controversy with the FOFO advice, reforms and the fact that you go into bank branches and they're giving you advice and, is that fair or whatnot? All of that is just, the whole sector has its own challenges quite apart from this. So I think your first point of making this visible and front of mind for investors, advisors to begin to realize that you just have to go there. I guess that would be my comment.
And I think in time we might see benchmarks being established that actually exclude the really top carbon intensive companies. Because if we have a benchmark which consists of a whole lot of stocks that actually excludes the bad performers, then advisors can start recommending investments against those benchmarks. So this would be really where the client is saying, I don't want to be exposed to carbon-intensive companies, but I want to have a diversified portfolio as much as possible. So it's a new benchmark that would need to be established to do that. And there is some discussion about that happening in Europe at the moment.
Yeah. One final remark is that we don't know what this project will generate and what it will create. We have very high hopes, we have very high expectations that it's going to drive a lot of change, but how that comes about and where the conversations go internally within the sector, we don't know where they're going to go. And we've had that same experience with the work we've done on banks, is that we've found that the work that we've done has been picked up and discussed in all manner of different parts of the financial sector, some of which I didn't even know existed. It's phenomenal that when you start to actually put this stuff front and centre, actually get engagement between individuals and their funds, just how far that conversation spreads. It's one of the exciting things for myself about getting this project out. I think we've got time for one more question. So.
Pardon me. This is going to be part observation, part comment, but I'd like some feedback. Sitting here when I first arrived, I thought I was sitting at a financial planning seminar where people were trying to convince me to put my money somewhere else. To me, and the first speaker spoke frankly, where there are two lots of people at risk. They're the lenders. Well, first of all, the superannuation people are putting their money through super funds, and the funds. If obviously the temperature rises, everybody's assets are at risk. And I'm all for the Liberal Party scare tactics thing. I just don't know why you just don't put up, your house is going to sink, your house is going to do this, you better get on board. Because I think trying to sell the message of climate to simple people who have 200,000 or 300,000 invested and they feel safe with BHP, and we're trying to convince them to have a mind shift, drag their money over for reasons which they probably don't understand. And I just think we're pitching too high to average people. They all are concerned, you're asking them to shift their money to something which they're relying on your research. I mean, I hope on your brochures that you have a disclaimer, that you read this and get second advice. You don't just say, oh, that's where I'm going to go and just lift my money and go. So I'm not being negative. I think really what you're doing is great. I just don't think you're selling it hard enough and scaring people into doing something. And when they know their house is at risk or their assets are at risk, they will do something. So if that's a fair observation or I'm being too harsh, please tell me.
Sounds pretty fair to me. I'm happy to push it as hard as we possibly can. I mean, we've put a lot of work into this and we want to get the results from it. The only thing I would say is, climate it's what gets me up out of bed and to work every morning, certainly. There's obviously a lot of other issues that people are concerned about with fossil fuels, coal mining, coal seam gas in particular in Australia. People can share whichever of those concerns and use this tool as a way of acting on those concerns. Last year we had a survey commissioned by the Australia Institute that found that about a quarter of superannuation fund members would be looking to shift funds if they found their current fund was invested in coal mining or coal seam gas, regardless of the reason, be it climate, be it the impacts on water of fracking, be it air pollution, whatever it might be. Across the board, there's a massively high level of concern. I mean, I was at the start of this evening going to talk about things like tipping points and how we're sitting on so many of them right now. I think that the shifts we're seeing in finance, we need to get a lot further down the track. Obviously, we've got a massive tipping point in terms of where we're at with climate change. We've got a massive tipping point we're standing on in terms of the response at a policy level from really key countries who need to make rapid change. But I think in terms of the social licence and the acceptability of fossil fuels, in particular coal, but I think coal seam gas as well, right up there, I think we're at a major tipping point in terms of these companies, these industries not having the social licence to operate anymore. And we want to see that reflected in as every aspect as we possibly can, because that is a justified withdrawal of social licence. This tool here is one of the ways that you can do that. but appreciate your comment and giving it the hard sell. Very much taken on board. So that's all we've got time for in terms of the questions and answers. I mean, we'll be here a little bit later on, just for as we wrap up. So please come up, and if you want to discuss anything, do ask. And obviously, those watching online, thank you very much for your participation. I just want to share a couple of things with you. We had a couple of questions about promotion. Here's some promotion for you. There are some other really critical events coming up in the next couple of months from 350 and Market Forces. 350 is one of a number of organisations working. Can I get the laptop back up on the screen, please? On the People's Climate Mobilisation, People's Climate March and Mobilisation, which is on September the 21st. If you go to peoplesclimate.org, you can find details of that. That is going to be a massive worldwide event calling for action across every aspect, as we've just discussed, on climate change. So please go and register and take part in that event. And we've talked about super. We've just quickly back to sort of our roots and our basics. We're with 350 again. Market Forces is organising a divestment day of action where we're calling on thousands of Australians to come out and publicly disassociate themselves, close their accounts with the big four banks, which we know are integral to getting major fossil fuel projects up and running. Again, it's about demonstrating that withdrawal of social licence, not just for the companies, but for those who put our hard-earned dollars up to fund these destructive industries. So there's plenty you can do. And really appreciate the time that you've taken out. Can we please just have a final round of applause for our speakers, Bob Welsh, Mara Boone, Charlie and the team at 350 and the Market Forces crew. Thank you very much.